Ladies and gentlemen, Greg Michalowski from ForexLive.com. This is a Forex quick look. I'm going to take a look at the dollar versus Swiss as we head into the afternoon trading on this Friday, and also think forward to next week for this currency pair. Let's review of what happened this week. Well, if we look at the first few days of the trading week, we did find a ceiling near this 0.8982 level. A number of different highs that formed this ceiling sort of at a random place, but the price on the downside was able to hold support near this 0.8934 to 0.8947 area. If we just go back in time, let's go to right around here where we have found swing low, swing low, swing low, swing low, swing low, swing low. Break below that level, becomes resistance through here, move lower through here, and then come back and return to that area a few weeks ago. Found resistance here, here, and here, and again in last week's trading found sellers near that level as well before moving above and finding support against the level, and that support held all through here at the beginning part of the week before we moved lower, and we had a little bit of break below the low end of that swing area before moving to the upside. Note here when we moved above the 0.8982 level, what was a corrective move right here, right down to the 0.8982 level, before the market moved higher into this other swing area target up here where we had swing highs, swing highs, swing highs, and then swing lows. Got a little dicey through here, but then used that level as resistance right here before moving to the downside. So returned back to that area and found willing sellers against that level. Now in the process of the move to the upside, we did get above the 200-day moving average. That's the green overlay line here, right here, and that level was broken in late trading yesterday on the downside, but we did hold above this other swing area. Lots of swing areas here in the dollar versus Swiss where, again, look at all the different levels through here where the market held resistance. It was a key level, and indeed when the price came back down in trading here yesterday, we did find support against that level and move back above the 200-day moving average. So lots to be said there, but for the most part, and going forward, what we're going to be looking for is the price to hold the 200-day moving average. If the price can stay above that 200-day moving average, guess what? The buyers are more in control. There is work to do on the top side, of course. Every move has if you hold support, you got to move higher, and you got to get through other levels on the top side to increase the bullish bias in this case. And that would require getting above this swing area and then moving above this these highs right here, which formed ahead of the extreme price that we saw in the month of, or in 2022, I guess, against this high through here at the 0.91134, 0.9119, and look at 0.9146. So those are the targets on the top side as long as the 200-day moving average can hold support. Let's take a look at the daily chart. And if we look at the daily chart, we can see the levels that are in play here going back in time to June and May, and also the break above the 200-day moving average. Why it's so important. The last time the price traded above the 200-day moving average, you have to go all the way back to this area right here, which to me looks like in the month of November 2022. So it's gone a long way. It's been a long time since the price moved above that level. So it is a key retracement, or a key level that needs to be broken, needs to be broken and stay broken to keep the buyers in control. I'm going to move the Fibonacci here from this point right here. We're above the 50% retracement of the last leg to the downside. If I move it up to the high price that we saw here, the 38.2% retracement comes in at 0.91627. That's going to be another level that we're going to be looking for on further upside momentum, get above the highs that we saw in the end of May, early June, and we start to look toward the 0.91627 level. That would be a potential target in trading next week. It would take a big move to get through to that, but certainly something that is in the radar. So overall, what we're looking for is the price to stay above the 200-day moving average. If we get, if we're able to do that, we're going to look toward the high price that we saw at the end of May at 0.9146, and then we're going to look toward the 38.2% retracement of this longer-term move down from the 2022 high. That level comes in at 0.91627. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.